In just 5 days, I made $31,000 trading. But here's the truth. It wasn't luck or some random strategy I saw on the internet, like many of these other people think trading is. It came from real experience, trial and error, learning from mistakes, and deep knowledge from research and just losing. And today I'm sharing 8 key lessons that transform my trading so you can avoid the mistakes and fast track your success. The first lesson I wish I learned earlier, and this one's a huge game changer, it's how to start your week right on the right foot with a cushion. Most traders jump into Monday without a plan, chasing trade, trying to make up for the weekend, and ultimately setting themselves up for failure. But here's the truth. How you start the week dictates how you finish it. And if you're starting from a place of chaos, it's no surprise you'll end the week frustrated and on a bad note, most likely in the red. First, it all starts with preparation. Failing to prepare is preparing to fail. If you do not prepare for the market, you are going to fail and you deserve to fail. Preparing is so important, and the way I prepare is by reviewing the market, reviewing weekend news, reviewing setups, scanning the market, journaling my trades from last week, seeing what I like for this week, what's my bias for this week, what stocks are strong and what stocks are weak, and stuff like that. Plan your strategy, define your objectives, update your watch list, establish risk parameters that maybe you messed up with last week. Just make sure you're safe on the risk analysis side. Mental preparation. This is huge with building a cushion because trading is a psychological game. That's the truth. And if you can't approach the week with a clear view, then the market's not going to look clear to you either, which is why it's really crucial. Like if you wake up in the morning and you're not feeling good that day or something bad in your life happened, do not let it go into trading. You need to trade like a robot. You need to act like a robot. If you're not able to act like a robot in your trading, then you're not going to be able to be a profitable trader, because you need to view yourself as not even a human being. You need to view yourself as a person just clicking buttons on their computer or phone and just reacting, not predicting, reacting to your setup. With this step, you also need to review and refine. So reviewing your performance the week before, journaling, seeing what worked, seeing what didn't work, seeing the trades you lost the most on, trades you won the most on, how you felt in these trades, what contracts traded the best for you, what stock did you make the most money on, what stock did you really like to trade, what time did you lose more money, what time did you win more money. Look at all those things and figure out what worked, what didn't work, and stick to what worked and don't do what didn't work. You need to always be adapting with the market because the market's shifting and it's never, ever stopping. It's always looking for new ways and adapting to your strategy, so you need to adapt with it, or else you'll get burned. When starting out your week on a Monday, do not make early decisions. You need to relax. You need to not feel that FOMO to take a trade, because this is what happens for most traders is they really want to take a trade on Monday because they've been waiting the whole weekend and they have that itch to trade, that gambling itch. And when you feel that trade is when you need to get the heck out the market. That's when you need to stop. That's when you're going to lose. So if you feel that feeling that you just want to trade, you need to relax. You need to take an hour off. Just watch the market. Please avoid early decisions on Mondays. Now let's get into the second lesson, the one that most people wanted to know right away. What strategy did I trade the whole week to make these results? But here's the thing, it's not about having some secret one-size-fits-all strategy. Instead, it's about having a reliable, well-tested system where you're reacting instead of predicting, that you can stick to and execute consistently, no matter how the market moves. Too many traders jump from strategy to strategy. I call it, you're for the streets. You're for the streets. You don't know which one to stick with. You want to hop from this one to that one, hoping for a quick win. That's the recipe for inconsistency and straight up frustration. The third lesson is one that separates the average traders from the pros. How much do you put into each trade? Most people think the answer is just bet when you feel confident, but that is not the truth. The key isn't about how much you think a trade will win, but about managing your risk properly and staying consistent with your trade sizing. Position sizing has a lot of factors to it. It's about calculating your risk based on how much you're putting into each trade, the type of trade it is. Is it a riskier trade? Is it a closer trade? Is it a farther out trade? This is basically what's going to protect you from devastating losses, and this is what's really going to help your risk factor. And here's the guide I kind of use to help calculate how much you allocate per each trade. A rule I use in trading is you want to risk a very small amount of your account per trade. But what does that exactly mean? Like you see traders say, I'm risking 1 or 2% of this trade. What does that mean? That doesn't mean they're only putting 1 to 2% of their account into the trade, that means you're only risking 1 to 2% of your account into a trade. So say you have $10,000 and you want to risk 1 to 2%. That means you're risking $100 to $200. With that, it doesn't mean you could put $200 in a trade because you don't want to lose 100% of your position. Never. Maybe take a 10, 15% loss, which is how it should be. So my rule is if you're trading with an account under 20,000, I would put around 10% into each trade, risking 1 to 2% of your account. So no more than a 20% loss. And your take profit should be minimum 3%, on average around 4 to 5%. And when the runners run, maybe even more on each trade. And as you're growing an account, it's really, really important that you don't get overwhelmed. And you see these guys on Twitter and Instagram making hundreds of thousands of dollars, and you're over here making a couple $100. So then you full pour and you do some stupid crap. Please do not full pour. I'm begging you. Full porting is literally asking for disaster. I have blown many accounts from full porting, and it's not worth it because in the long run, you want to be trading for the next 5, 10 years. You can't full pour. Yeah, sure, maybe one time you're going to make back your loss, but I promise you, out of 5 times, you're going to blow your account a lot more than the times that you're making back your loss. And if you focus on hitting those base hits instead of going all in, you're going to have a much better time. So summary of the steps. You want to put around 10% of your small account into each trade, risking about 1 to 2%. Make sure you set your stop losses, whether it's mental or regular. Make sure you have it. Before you enter a trade, the first thing you should have is a stop loss. And then calculate your risk. Make sure it is okay. Calculate the potential win. Make sure it is okay. Adjust correctly for volatility. So swing trade versus a day trade, 0 DTE trade versus maybe a 2 or 3 DTA trade. Just make sure you're always adjusting and ready. And the biggest rule is do not full port, please. By consistently applying this position sizing strategy, you limit your downside risk and create a disciplined approach to trading. Position sizing is based on risk and it helps build your capital, but there is a math to slowly growing your position sizing, and that's what growing your account. But one thing I would do is when you start to grow your position sizing, it just goes with growing your account. So like say you grow your account from 2,000 to 3,000, then you have the right to pull from $200 to $300 in each trade. You gain the right to position sizing and increasing your sizing, not the other way around. And if you can't grow a $5,000 account to $10,000, you're not gonna be able to grow a $50,000 account to $100,000. And that I promise you. So it's not the amount, it's just your trading performance. The fourth lesson is one that sounds simple, but is often hardest to follow. Sticking to your trading plan. You can have the best strategy in the world, but if you can't follow a consistent plan, you're setting yourself up for failure. The biggest mistakes I've made in my trading career came from abandoning my plan and the key to the moment, either out of fear or greed. And guess what? Every single time I did it, it cost me big time. Sticking to your plan isn't just about discipline. It's about trusting the process, letting the trade play out, and understanding that in the long term, this plan will work out. Do not let the emotions get into the effects of your long-term trading, because I promise you the long-term results will outweigh the emotions. Here's how you can stay disciplined and adhere to your plan as a trader. And your trading plan needs to be very clear with concise entries, exit criteria, risk management rules, and defined goals. The biggest thing with your trading plan isn't about how much money you're making each trade. It's about what's the system you're gonna follow, what's gonna indicate you to take a trade. One of the biggest problems I see traders make is they want to predict and not react. When trading isn't about predicting or thinking, you think the stock's gonna rip. No, because you need to have a precise entry. And for me, I have a lot of patience. I'll miss 4 to 5 trades because I didn't get the exact entry I want. If I don't get the exact entry, I'm not putting my hard-earned capital in it. So make sure in your plan, one of the rules is that you're gonna stick to your strategy and only trade that strategy. I trade the same exact strategy literally every single day. Every single day. That's okay, because that's part of my plan. If it's not broken, why fix it? I slowly adapt it with the market. That's one of the things with your plan. Another thing is, what's your max loss? In your plan, you need to have a number where if I get down this much in a day, I get out. I stop trading. So say for you, you're trading at $1,000 account. If you get down $200, you're not trading anymore for the day. It shouldn't even be, that's too much. It should be literally like less than probably $30 to $40 at the $1,000 account. So have that max loss in place and make sure you follow it. Also, another thing is like, if I take more than 2 losses in a day, I don't trade anymore. I don't. I can tell you my plan, but it doesn't really matter because your plan is gonna be based off of your rules. And the way you want to figure out your plan is look at the mistakes that you make. Look at what happens to you when you lose. Look at what happens to you when you blew your account. Was it because you full ported a trade? Was it because you chased your losses? Whatever it was, make rules that make sure you avoid making those mistakes again. And that's going to be very, very important for you. Lesson 5 is probably one of the hardest for most traders to accept, because as humans, we emotionally are wired to do the opposite. Like, we not chase your losses and you didn't know when to trade. After a loss, the instinct to jump back into the market is very strong, and it's one of the quickest ways to destroy your account. I've seen traders blow weeks of profits in minutes because they couldn't walk away after a loss. Trading isn't about making back what you lost. It's about waiting for high quality steps and trading only when the market is in your favor. This mindset shift alone can save you thousands. One thing I'll tell you with trading is that the best trader isn't the one who's best at winning, but it's the one that's best at losing. It's the one who's able to accept his losses and understand that it's a part of the game. One of the best traders I know told me that his average loss is 3 minutes and his average winner is 18 minutes. That means that he holds his average winner 5 times longer, 6 times longer than his average loss. That's deep. And what does that tell you? It means that when something's not working, he cuts his losses fast and he adapts. He accepts it. But when something is working, he holds it long. And that's really, really important. For example, for me, I have a rule. If I take 1 or 2 losses in a day, I stop trading. I accept the loss. I stick to my rules. I avoid revenge trading. I know when to stay out of the market. This is another big thing. Like, you don't need to trade every single day. There's days where I do not take any trades because I know it's not worth it for me to trade. My setup's not there. My setup's not there. I'm not going to trade. That's part of being a trader. You have 250 days to trade. You don't need to trade every single day. Concentrate on executing your strategy consistently rather than worrying about each individual trade results. And if you're having trouble accepting losses or taking losses because you don't want to, you need to realize that you're not going to win every single time in trading. And in trading, you need to completely drop your ego. The stock market is better than you. It's better than you, but that's okay, because you can still be good. There's times where it's gonna win more than you. You're gonna lose more than you win. But as long as your risk reward is there and you're able to accept your losses, then you're gonna be okay. By really staying disciplined, following your trading plan, and sticking to solid risk management principles, you can avoid chasing losses and increase your chances of long-term trading success. Lesson 6 is what separates the top trader from the rest of retail. Most retail traders take the same trades, they do the same thing, and that's why majority of people lose. They chase after what already happened, they have FOMO, they get caught up in market noise, they see other people's screenshots, they take other trades, they take 1,000 different strategies because they're bored. Retail traders get stuck in the here and now, while the pros are already thinking about the next move. You need to always stay ahead of your competition. Here's how you can achieve that. Number 1, every single night you scan the market, see what's moving, see what looks good. Zoom out. This is the biggest thing I'm going to tell you for this step is zoom out. Don't always look at the 1 minute time frame, the 5 minute time frame, 10 minute. Look at the daily time frame. Look at the weekly time frame. Look at those larger time frame setups, because those setups are going to pay a lot more than the smaller time frame setups. And that's how you figure out where a stock is going. They're looking at those key levels. And also understand retail behavior. You can track what retail traders are focusing on and get the heck away from that. There's something called the Fear and Greed Index. That tells you when the overall sentiment of the market is very fearful versus the overall sentiment of the market is very greedful. When the overall sentiment is fearful, that means your share is going to go down, high chance it's going to go up. And when the overall sentiment is greed, that means everyone's happy and they want to make as much money as they could. That's when the market could go down. You need to understand that and always position correctly. Another thing with this step is using your cushions from swings. So if you make money in a swing day, this is a very, very good thing because now you have a cushion for the day. You're up a certain amount without even taking a trade that day. So you only want to risk profit if you're taking a trade that day. Do not get under break even. By following these steps and not always going with the crowd, it's going to position yourself for long-term success in the market. Lesson 7 might even surprise you more, but it's one of the most powerful lessons in this whole video. Less is more. Most traders think that the more they trade, the more they'll make. But the truth is, overtrading is the fastest way to burn through your capital and end up taking losses that are unneeded. The pros know that quality beats quantity every single time. Trading less, but focusing on high profitability setups not only protects your capital, but also increases your overall profitability. Think about it. In the casino, the longer you stay, the higher chance you what? The higher chance you lose. Same thing in the market. The more trades you make, the higher chance you're going to take a loss. What I'm known for is my one and done concept, where if I take a nice green trade of the day, I'm happy with my day, I stop. I go enjoy my day. The whole point of trading is to replace your 9 to 5 with trading. So I don't want to replace my 9 to 5 with a 9:30 to 4. No, I trade for about 1 hour every single day. And usually I take one trade every single day and that's it. One is all you need. One trade will change your life. Some of the reasons are you're taking higher quality trades, you're improving your risk management, you're reducing your emotional influence, you're having lower costs, and overall, you're focusing on higher quality setups that you can size heavier on. So I don't like those guys that take 1,000 scalps here, there, because you know what happens? One big loss and all those scalps are gone. That's why I'd rather focus on higher quality setups and only take higher quality setups. Also, the less trades you take, the more consistent you're going to be. It goes side and side with patience and better timing. When you're only taking one trade that day, you're going to be very, very patient and you're going to be very, very selective with your timing, which is huge for having good entry. By adopting the kind of less is more mindset, you become more selective, patient, and disciplined, all of which are going to lead to greater profits in trading. Lesson 8 is the foundation for long-term success. Treat trading as a business. Too many people approach trading like a hobby or a game, and that's exactly why they fail. If you want to make serious money in the markets, you need to run your trading like a business and treat it like that. That means having a plan, tracking your performance, managing your risk like you manage your budget, and always think about the long term. Businesses don't survive on making reckless decisions. They survive on making calculated, strategic moves and treating every dollar like it matters. Trading is no different, and when you treat it like a business, you set yourself up for consistent, sustainable success. Treating trading as a business requires a disciplined and structured approach that prioritizes planning, risk management, and continuous improvement. It includes really managing your hard-earned capital and not taking stupid trades. It includes reviewing your performance, ongoing your education, adapting to the competition, which is the stock market, and it demands accountability. It demands clear goals. It demands a long-term focus, which is so important. Something I'll kind of end off with is don't just focus on the money. When you're very focused on the money, so you'll make the least of it. But instead, focus on improving skills every day. The money will follow when you build a solid foundation. Trading isn't easy, but if you apply these 8 lessons, stay committed, you can turn it into a profitable, life-changing career. Take everything one step at a time. Relax, take a deep breath, and keep refining your approach. Most importantly, do not give up. The market rewards those who stay disciplined, keep learning, and never quit. You need to continue viewing trading as the long term. View it as not this week, not even this month. View it in quarters, in years. Because the market isn't something you control every single day. It's not something you're gonna win every single day. Sometimes you'll even lose in the week. That's why with having these more clear, broader goals based on your trading performance, it's gonna help you overall. And listen, I know some of you guys are probably out here and you're losing a lot of money trading. You need to view it as college. In college, what do? You pay to learn a skill. You pay tuition to learn a skill. Same thing in trading. You're just paying a tuition right now to learn a super valuable skill. And I promise you, the skill of trading is more valuable than anything you can learn in college, anything. So really take a step back and think about it like this. I'm losing to learn a skill. But if you don't learn from your mistakes, then you're just blowing money. Trading changed my life at 17 years old. And if I could do it, then you could too. I'm going to continue to be posting tons of educational videos on my YouTube. Thanks for watching, and I'll see you in the next video. Make sure to like and subscribe.